Morten Kongshaug, Chief Strategist with Danske Bank. Thank you very much indeed for speaking to us. So we were saying that, as August draws to a close, how would you describe sentiments in the markets right now? And what does this indicate to us about what September might have in store?
As far as we can see, this has been a blow to confidence. We saw this downgrade from the S&P, and that started a confidence crisis in global stocks. As far as we can see, if we look back in history, there has been several crises since 1998 with long-term capital management, which we can compare to this situation. And if we can compare, there's one thing that is, going above everything. And that is time. We need time to recover from this confidence blow. And as far as we can see, we need a couple of weeks before we can actually start to recover from the situation. So that matches September as a positive month in my picture of the situation.
Morten, if we look at what's been happening just this morning, in the past hour, we were seeing stocks initially trading higher in the session. Then came Eurozone economics confidence at the lowest level since 2008. And we're seeing a reversal in the direction of markets. Not to read too much into market movements in any one day or indeed any one piece of data that is released, but it does seem to show that confidence is extremely fragile right now, and almost, they're looking for any little economic indicator, perhaps more closely than they would at other times.
I think we have to separate confidence data from real economic data like jobs or factory orders. I think that we should expect confidence to react to this slump in stocks here in August. And I believe that we will get more information with the non-farm payroll report on Friday. This could be an anchor report for the market. This is some of the stuff that we need to get a recession. We need to lay off jobs in the private sector. And without, we will probably not see a recession in the US. And that is a key point for the market at the moment.
So if we are you seeing signs of risk appetite starting to come back then? And what does it depend upon? What needs to happen if it is to be sustained?
I think there are at least three things besides time, and that is obviously we have to know whether there's a recession out there or not. We see the market sees a 40% probability of that. Very high compared to my estimates. We need to see a credit cycle in the US, credit access continuing. We need to see jobs continuing in the US or hiring to continue in the US. With these two things, I think we are in the safe side of a recession. And if we see this recession probability coming down, this is obviously the most important thing. There's another thing, and that is the banking sector in Europe. We have CDS spreads above 250 in last week's trading. I think we have to see more confidence coming into the banking sector in Europe. We need to see the EFSF program to start. We need also a ratification of that. I think that is obviously why the ECB has to act in Italian and Spanish bonds. But when that plan is coming into working, I think also that could cool off some of the fear of a default or a Lehman 2 that is obviously in the market at the moment. So these two things are obviously what I would point out as triggers for a recovery, that we cool off the default fear and also cool off the recession fear in the US.
Really good to get your thoughts. Thanks so much for your time. Morten Kongshaug, Chief Strategist at Danske Bank. Thank you.